Good morning. Welcome to the XM.com weekly market update. And we're joined again from Abu Dhabi, Peter McGuire, the CEO of XM. Good afternoon good morning to you, Pete.
Good morning, Andrew. Good to be here. Happy Wednesday.
Yes. All right. These markets are certainly providing a lot of activity at the moment. So we'll just start domestically. The Aussie dollar coming under quite a bit of pressure with the stronger US dollar, but also with the Reserve Bank here keeping the interest rates on hold this month.
Yeah, exactly right. US dollar index over 107, Andrew, and it's just been extraordinary over the last, say, 12 weeks. So, yeah, showtime, absolutely on fire. And the Aussie sitting at about 63.20. Everyone's saying it's got a 62 handle, and it's just been a great market to short, as you can see with that chart, one-way traffic. And, is it going? I'm reading storylines by Christmas, has it got a 50 handle in front of it? A high 59 or a 58. So let's just see what happens. But it's been dynamic for traders.
It sure has. And once again, interestingly, though, like a lot of pressure on the Aussie dollar, but the labour market is holding up significantly well. But then in turn, that's putting probably more pressure on inflation, which really puts the Reserve Bank in a tough situation where they will probably need to put interest rates higher.
Yeah, exactly. The RBA governor, that was their first meeting yesterday. That's my understanding. So you've only got November and December as far as opportunity for a rate rise, and that story tells everything. So we'll just have to wait and see, Andrew. But naturally, that US dollar and with the Aussie not getting a rate rise, it was crushed. So I think we've just got to see how the next lead up to Christmas moves. And no one wants a rate rise, but people with dollars in the bank do, but the general community don't, and we've just got to see how that all moves forward. It's going to be an interesting time and a lead up, and equity markets are certainly coming under big pressure as well.
Sure are. And obviously a lot of impetus is actually from the US Treasuries, both the 10s and the 2s close to sort of 16-year highs, continually rising, and that's putting a lot of worry into the equity markets, hence the sell-offs that we've seen recently.
Yeah, exactly. I understand the Dow's given up all its yearly gains, so it's it had a pretty good first 5 or 6 months, probably 7 months. That's all now dissipated, and still the Nasdaq's well up considering where it was. But we understand that that's traditionally those 8 or 10 big behemoths that have taken the market by full charge, and that's even given up some of its gains. So yeah, we just got to see how the equity markets. You've got earnings season. Really, we're starting to be into the pointy end of it, and October's traditionally not a great month for equity. So we'll just see how it all rolls.
Yeah, and it's sort of interesting that those, as you mentioned, those huge tech companies, and the advantage that they've got is they've got so much free cash that, higher interest rates, they can put the money in the bank and earn good money on it. So they're not like the smaller mid caps, which have a lot of debt. So they're in a bit of a, not so much a win-win situation, but they're certainly a lot better off compared to a lot of other companies.
Yeah, exactly right. The Nasdaq sitting at just over 13,000. So I'm just looking here, but it was, punched down hard, nearly down 1.9% on this morning's close in, New York. And be interesting to see how it trades tonight.
Yeah. Once again, you mentioned the dollar index. It's all one-way traffic there at the moment, and that is up.
Yeah, absolutely. It's been an incredible time for, currency traders against nearly everything. And Japanese, the yen intervention, did they intervene? What's the story? And there is no doubt that you'll probably see additional rate rises from the Fed. So I'm thinking possibly, 110. It's been incredibly choppy over the last year from, 113s, 114s down to 100 and now back to 107, and it's 110, the new hello by Christmas. We'll just see how it all rolls, Andrew. But again, there's talk that the Fed's naturally going to have to raise rates this year.
Yeah, and once again, these job numbers came out overnight, which were much stronger than the market anticipated, which led to that sell-off in the equity market, basically on the back of the equity market saying, well, if the jobs are this strong, that'll lead to higher inflation, therefore we need higher interest rates. It's the same old story.
Yeah, that is the same old story. And you just can't go against the data, and we've just got to see again how aggressive the Fed's going to be over the lead up to Christmas and then into 24. You know, it's every matter of months changes as far as, or every couple of weeks, rhetoric and market sentiment and all that. And have a look at gold here. Boy, oh boy, sold off hard.
Yeah, and sort of like, once again, it had a good run earlier in the year, but I think just the strength of that US dollar, and we sort of spoke off air about traders just looking at other markets, where is that partly the reason what gold has come off, but it's been a good trade, but on the downside.
Yeah, exactly. You know, people have just flocked to it, and it's been an incredible ride, you know, down 60, $70. And you know, the best part of a week, and it's just that's what traders want. They just want that direction, and once it shows and everything lines up as far as your RSIs and your moving averages and stochastics and Bollinger Bands, it's just showtime, and that hasn't disappointed. And also, Andrew, all the other metals have been sold off as well. You know, you're talking copper and silver and tin and lead and zinc. So yeah, it's been base metals and precious have really been punched hard.
Yeah, sure have. And once again, we've been keeping an eye on the oil markets over the last couple of weeks. They've come off slightly in the last week, still hovering around that sort of $90 plus mark. It's a little bit of a reprieve at the moment, but you would think the trajectory of going up will continue in the coming months.
Yeah, exactly. I'm just looking at the screen here, you know, and you're still at $91 for Brent. It's sure it gave up a couple of dollars, but when you look at what it's achieved in the last 12 or 13 weeks, it's just been one-way traffic. It's been nearly parabolic. So, you know, any market takes a little bit of a breather. It was exhausted to the upside, traders profit take, and then, you know, maybe just, you know, sit on the sidelines, take a deep breath, and do we see another leg up? Interesting to see what the thoughts are as far as Russia, Saudi, and, the issues as far as power, electricity, and, you know, consumption with the world. Andrew, I can't believe the energy consumption here in the Middle East. It's just mind-blowing. And I'm off to India this afternoon, and, you know, the amount of, you know, construction and cranes, and it's the place is booming here, and it's naturally booming in India. So yeah, it all needs energy, Andrew.
Yeah, that's right. And it's a lot of it comes from only a couple of sources as well. But yeah, it's certainly been an interesting week, and there's plenty of activity and I guess nervousness in the market. So, but, you know, if for the short-term traders and the prop traders, that volatility is exactly what they like.
You betcha. And, you know, I think that it's not going to disappoint leading into Christmas. It's too hard to forecast where we are, you know, the other side of into 24, Andrew. But I think the next, you know, 11 or 12 weeks will be very dynamic. And think of equities, think of currencies, and naturally energy prices. When you look at the big picture and that macro view, it's going to present some incredible opportunities. And so that's where traders have I think the very much the mindset. You can be long this morning and short this afternoon, and that's the dynamic nature of these markets. They don't sleep, and it's exciting.
No, plenty of activity, that's for sure. So we'll keep an eye on things over the next week. Enjoy the trip while you're overseas, and we'll regroup again next week.
Yeah, I'll look forward to it. I'll be in Fujairah for the oil conference just outside of Dubai. So I'm off to Dubai. Off to Mumbai this afternoon. We'll talk with ET Now and CNBC and a little bit of other business. Then we fly back into Dubai, and then we'll be with the Bloomberg on Sunday morning. So it's quite exciting. And I sit here and just inhale the markets, and they're electric at the moment.
Yep, sure are. But once again, thanks, Pete, and we'll catch up again next week.
Thank you, Andrew. Take care.